The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone, to another edition of Breakout Investing on TFNN, Tuesday, July 17th. Thanks very much for tuning in, as usual. Breakout Investing now 5 days a week on TFNN from 3 to 4 Eastern Time. Number to use to get through, talk about this market with me, is 877-927-6648. And don't forget, the show is available as a podcast on iTunes. If you can't catch it live, you can always go to iTunes and download the podcast there. And somebody also made me aware of an interesting app. I think it costs 99 cents or $1.99 on iTunes, but it's called Downcast. Downcast, an easy way to access a podcast on iTunes without syncing to your computer. So be sure to check out the Downcast app on iTunes. And don't forget, you can listen to all TFNN programming now on your handheld device, your smartphone. Just type in TFNN.mobi, TFNN.mobi in your smartphone browser, and you can listen to the stream that way as well. We'll be going over charts on the show like I always do. If you want to look at those charts right along with me, be sure to tune in to Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live, and the show is archived on Channel 13. You can also watch Tiger TV on your handheld device as well. So that's where we're at. We'll start by taking a look at the major indices in just a moment, but I wanted to take a look at a chart of Apple 1 week ahead of its earnings report. They're going to be coming out with earnings 1 week from today, Tuesday, July 24th, and this is really just a classic example of what a cup with handle pattern looks like. I get emails all the time saying, "Hey, does this look like a cup with handle pattern? Does give me your take?" And a lot of times I get charts that don't look anything like a cup with handle pattern. So for those of you wondering what this bullish technical setup looks like, Apple is in a picture-perfect cup with handle pattern. Whether or not the pattern works is very, very iffy at this point. Obviously, this is not the type of environment where technical breakouts have been succeeding. For every 5 that are working, there are probably 5 that aren't working. But the swing point for Apple right now is 620, thereabouts. It's going to be its intraday high set last week. Shares of Apple right now up $1.33, 0.2% to 608.24. So it's about 11-12 points away from that swing point. Again, earnings coming out next week on Tuesday after the close. $10.38 a share. That's what analysts are looking for. That would be up 33% from a year ago. Sales up 31% to $37.4 billion. Going to be looking at the number of iPhones sold, number of iPads as well. So we'll see what the future holds for Apple. I think it is a pretty good bet that if Apple is able to break out with conviction over $620 a share, that's going to be good for tech stocks in general. If it fails and is not able to muster a breakout over that 620 swing point, probably not going to be good for tech. So last 2 quarters, Apple has done a pretty good job of beating estimates handily, so that 1038 estimate is probably going to be pretty low. Last quarter, they beat the consensus estimate by 22.5%. 22.5%. The quarter before that, they beat by 36.5%. So I think we could easily see an $11 a share number, if not more, for Apple. So we'll see what that company has to say next Tuesday after the close. All right, let's check in on the market here. Another kind of volatile whipsaw back and forth day. Pre-market futures pointed to a higher open. Bernanke started to testify on Capitol Hill at about 10 o'clock Eastern time this morning. Market quickly realized that it probably wasn't going to hear anything new from Bernanke, started to sell off. It was looking pretty ugly there for a while. But the NASDAQ composite is back up near its session high. It's up 15 points right now, 0.5% to 29.02. Excuse me, 29.12 for the NASDAQ composite. NASDAQ composite hit an intraday low of 28.71, which basically coincided with its 50-day moving average, fell about 3 points below the 50-day line, and now is back up near its session high. So, my general take on the market, I try to, give my take on a daily basis. We are still in an uptrend. The uptrend is still intact, which means that it should be an okay environment for making money in stocks, but it's an uptrend that clearly is under some pressure due to recent signs of selling in the major averages, particularly in the NASDAQ composite. When the market started selling off soon after Bernanke started testifying, volume, first of all, has been very heavy today, tracking much higher than Monday's levels, about 20% higher on the New York Stock Exchange and the NASDAQ. So if we end with strong gains today, it's an accumulation day because we're moving up in higher volume. That's compelling. We'd like to see more of that going forward. Unfortunately, we have not seen that recently. We've seen a lot of higher volume declines and lower volume gains, which is not what you want to see. So it's still a very tricky environment to make money in stocks out there. It's a trading type of market where if you try to let a stock run, you buy it at the right time, it moves, gives you 2 or 3 percentage point gain in a short amount of time. Those gains are a lot of times just gonna evaporate back to break even or worse. So if you're not trading this market, it's a very risky market out there. So trying to still have faith in this rally. The yellow flags are out there. They're worth paying attention to. Certainly tough, getting long with conviction here. We've seen a lot of negative pre-announcements on the earnings front. A lot of earnings reports that we'll go over in just a little bit. Some good, some not so good, but it's really going to get busy. This week and next week and the following week. So hopefully the good news will have the upper hand over the bad news in terms of earnings. Headed into today, there were 4 higher volume declines in the NASDAQ composite. I'm going to have to double check that. I think it's either 3 or 4. 3 I know in the past 5 trading sessions. So I know that for a fact. In the past 5 trading sessions, there have been 3 higher volume declines in the NASDAQ composite. When they start to cluster like that, that's a pretty significant yellow flag. If you've been putting money to work, not having much success, it's time to take the foot off the accelerator. There's nothing wrong with taking a cautious approach here. There's nothing wrong with trying a stock on for size here and there, but nothing too aggressive. Small positions to start. My overall take is that the risk still outweighs the reward here. The risk outweighs the reward, and the goal as a growth investor is to have an edge in the market. I don't feel like I have an edge right now, and the goal is to swim with the market tide, not against it, not trying to make money in a downtrending market. So even though the uptrend is intact, there are enough yellow flags out there where I don't feel the need to force the issue here. Anytime you force the issue as an individual investor, that is when mistakes tend to be made, and that's when you tend to that's when money losing trades start to become more prominent. Have you tried buying some stocks over the past 2 or 3 weeks? What have they done? Have they gone up? Have they just treaded water, or are they all money losing? If they're money losing trades and the market's telling you they're not working, you got to scale back. Don't feel the need to force the issue. It's on a day like today where the NASDAQ's up 0.5%. Let's check in on the S&P 500. It's also up near its session high as well after early weakness. It's outperforming up about 9.5 points right now. The S&P 500, 0.7% to 1363. So you've got these nice gains for the market. You've got some decent volume expansion today. Nice little day of accumulation, but need to be careful out there. And it's tempting to put money to work in a market environment like this. And I did add a new name to my Ultimate Growth Stocks model portfolio yesterday. I had been scaling back last week, just erring on the side of caution. So I'm not averse to putting new money to work here, but you just got to be cautious. You got to be quick on the trigger when new money starts to come in from the sidelines. And I do believe that will happen at some point between now and the end of the year, maybe towards the end of the summer when people start coming back from vacation. I think it's going to be easier to hold on to stocks for a longer period of time without the fear of having to sell or getting shaken out of a position just a couple days after buying. That's a very difficult market to navigate when you have volatility like it is. But when new money consistently starts to come in, when big investors start putting money to work, when sentiment starts to improve and leadership starts to get broader, that's typically the time you want to be buying. So we are in an uptrend right now. It's under pressure. There are yellow flags out there, so got to be quick on the trigger here. U.S. dollar index hit an intraday high today. What was it, around 83.56? I think it was. Now trading near its session low. 83.08, down about 2 ticks. We'll probably see the exact same price performance in the PowerShares Deutsche Bank US Dollar Index Bullish Fund. You can see it hit an intraday high of 22.99, intraday low of 22.84. It is at 22.85. So trading pretty much at its low after early strength. So market liking the reversal in the dollar here, no doubt about it. Crude oil up 0.9% today to 89.22 a barrel. Gold for August delivery fell $2.10, not much at all, 0.1% to settle at $15.89.50, $1,589.50 an ounce. Ben Bernanke testified on Capitol Hill today. Again, there was some optimism ahead of the testimony. Pre-market futures pointed to a higher open. He started talking, kind of somber testimony about the economy, risks to downside growth. I really don't have any doubts in my mind that the Fed is going to lower its economic growth forecast again for the U.S. economy. Right now, it's second half growth of 1.9 to 2.4%. Wouldn't be surprised to see it down to maybe 1.4 to 1.9. I think that the jobs market, personal spending, retail sales could be under a little bit of pressure here for the foreseeable future. We had retail sales data yesterday that was a big disappointment. Of course, job growth over the past 3 months has been pretty ugly as well. So wouldn't be surprised to see the Fed lower its economic forecast. This next meeting is until mid-September. Few people think the Fed's going to take any action on the economy before their next meeting in mid-September. But if economic conditions or if the market were to deteriorate quite a bit before then, we could see some action, although people are wondering, what is it the Fed could do? Are we going to lower interest rates even more? How much is that really helping? That's a legitimate question. All right, folks, headed into the first break. Ken Shreve with you on TFNN. You're listening to Breakout Investing. We'll go over some earnings reports when we come back, so stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Let's check in on shares of Mosaic, MOS, on the New York Stock Exchange. Stock, nice little breakout here from a cup with handle base. Top line growth, bottom line growth not there. Fundamentals a little questionable. I really can't wrap my arms around the fundamentals of these fertilizers. I've always found it to be a tough group to play, but the charts of many of the fertilizer names continue to look pretty bullish here. Shares of Mosaic up close to 6% now, $3.13 to $58.50. Company reported earnings down 18% from a year ago to $1.25 a share. Sales down 1% to $2.8 billion. The company did double its dividends, so investors took that as good news. Looking out into fiscal 2013, annual earnings expected to rise 10% from fiscal 2012. 2014, earnings up 7%. So you're not looking at huge growth here. And the quarterly results from Mosaic today, the second straight quarter where earnings and sales growth declined. So technically a strong stock, but fundamentally coming up short in my view. I typically like to see a good consistent track record of annual earnings growth, not erratic growth, and certainly in recent quarters like to see good solid earnings and sales increases. And if growth is accelerating, that's even better. But you really don't have any of that with Mosaic Company. But you do have a stock that is under accumulation. So a lot of technical investors certainly encouraged by the way Mosaic is acting today. Other fertilizer names doing well. Let's take a look at CF Industries. Nice breakout from a cup with handle base in this name as well. Breakout over 202.33. That's the swing point set right here. So breakout over 202.33. Still within buying range, not extended. Big gain yesterday. Another 2.4% gain today, but looking at that swing point of 202.33, stock trading at 203.33, still within range here. But again, same situation with CF Industries. Now with CF Industries, you do have excellent bottom line and top line growth in recent quarters. No doubt about that. You do have some deceleration in sales growth. In its latest quarter, sales were up 30% year over year. Quarter before that, they were up 39%. Quarter before that, up 53%. So the rate of sales growth has been slowing down. But earnings this year expected to be up 14%, but down 20% in 2013. So kind of tough to again wrap my arms around growth prospects for these fertilizer names. But CF Industries having a good day. And then a name we talked about yesterday, Rentech Nitrogen Partners, a recent new issue. Good breakout yesterday over 29.49. Here was your swing point. Stock tried to follow through today, but again, having some trouble here. Still up 1.5% to 30.60, but well off its intraday high of 31.34. So good volume breakout yesterday. Volume is pretty strong in the stock again today. Rentech Nitrogen Partners, ticker RNF, but it is trading near its session low after early strike. So Ferts don't look too bad here. Let's take a look at insurance name Brown & Brown. Real steady track record of growth here. Strong balance sheet at Brown & Brown. Stock continuing to hold above its 50-day moving average. Not clear to me that this is ready to start a meaningful uptrend here, but right now shares are up 17 cents, about 0.6% to 26.87. The numbers at Brown & Brown weren't too bad. Earnings up 12% from a year ago to 29 cents a share. Sales up 18% year over year to about 291 million. But again, good consistent track record of growth here. One of the higher quality names in the insurance space. Mid-cap stock with a market cap of $3.9 billion. One of the losers today, let's take a look at J.B. Hunt Transport Services, a stock that had been showing relative price strength ahead of earnings. It gapped down today. Shares down 5.7% now to 55.03. Trucking firm here. Earnings up 26% to 67 cents a share. Sales up 9% to 1.25 billion. Issue here is decelerating sales growth for several quarters in a row. The results today marked the fourth straight quarter where their sales growth decelerated, or the rate of growth slowed. So JB Hunt headed into today holding above its 50-day moving average. It is now below the line and looks like a technically broken stock for now. Take a look at Goldman Sachs as we head into the second break here. Goldman Sachs trading near its session low, still up 35 cents to 98.03. It hit an intraday high of $100.49. Another broken stock here. Not clear to me that Goldman Sachs is ready to assume a leadership role anytime soon, but the numbers here, sales down 10% year over year, earnings down 4%. All right, folks, headed into our next break. Stick with me. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing now 5 days a week. Happy to say from 3 to 4 Eastern, so be sure to check it out when you can. 877-927-6648. Let's go to Joe in Boston. Joe, how you doing today?
I am hot today, Ken. It is about 95 here.
Oh, man. So what's going on with Big Papi? Is this a serious injury or what? I saw him kind of gimping around the bases last night.
Yeah, I don't know. I'm not a huge baseball fan.
Oh, okay. All
so
right.
I can't give you the scoop.
No, I won't hold that against you, Joe. So what's happening?
So what do you think of this Basin VAL? Does that look decent or no?
You know what? It's just kind of... Yeah, it's a little sloppy. It's we're talking about Valspar here, looking at a daily chart in Tiger TV. These charts from StockCharts.com kind of reveal somewhat erratic trading in the handle area. It is, it's hanging in there. It's I wouldn't call it a totally faulty chart, but it's one that could work. You do have a couple of higher volume declines in the handle area. Typically, Joe, as you probably know, when that handle area forms, you really want to see kind of a tight downward move. Right. You don't want to see a big correction. This one's not bad. It could still work. It's a good company, Valspar. The other thing to keep in mind here is just the fact that sales growth has been slowing down here in recent quarters, which is also problematic. So I'm lukewarm at best on Valspar here. There's one setup that is interesting in the healthcare space. Edwards Life Sciences, EW. I don't know if you've been. I was going to talk about that one in a little bit, but this is really what kind of good technical action looks like. It's just kind of moving sideways, tight. Needs to base a little more, but the stock is outperforming today. It could try to break out soon, but some healthcare names still look interesting. Was it you that called last week about United Therapeutics?
I called you a couple days ago on that one. It looks great now.
Yeah, it's still looking pretty good. That's again that's making actually a nice breakout today, up 2.3%. So nice call there. But that looks
like it wants to go up to like 59.
Yeah. Well, it's acting very well, no doubt about it. So healthcare is working here, but Valspar, just kind of 50-50 on that one.
Now, what do you make about the candle today in Zillow?
It's kind of weird action in Zillow. Zillow is one that I've been talking about on the show. I know you know that. I like the company's growth prospects. It was kind of ugly action. I mean, it hit an intraday low of 39.50. You do have some volume in the stock today too. So, especially at the beginning during the first couple of hours of trading, there were some big sellers in the stock. It is down 43 cents now to 41.43. Market's bleeding a little bit into the close here. So I was actually disappointed to see the price action in Zillow. I don't own it yet. I'm still watching it. When it broke out last week, volume rose from the prior session, but it was still a below average volume breakout. So really wasn't convinced that the big guys were in there buying. I haven't given up on this one yet. I think it could still work, but the true test is, if it eventually gets over that $43, $44 level, and if it does there, and I really see some conviction behind the buying. I still like this name, and I want to own it at some point, but mostly disappointing, price action today for sure. Right
now, did you? This is a kind of a different question about because it's kind of against your style, but did you ever? Do the short selling course and work it the other way where I think big companies are topping out. Do you ever look at those at all? Or?
Well, SXC Health Solutions, SXCI. They recently we'll take a look at that one. They recently changed their name and ticker symbol to CTRX. I think that one looks very vulnerable here. This one is setting up as a good short. You just see a lot of reversals in this name starting in June. Gave up its 50-day moving average today. Seeing a lot of selling in this name and not much buying. I think this one. So I can recognize good short setups when they present themselves. Starbucks is another one. I'm not real keen on Starbucks, a large cap name. So if you follow me on Twitter, sometimes I'll put a chart out there that I think looks vulnerable. That's the problem about this market right now, Joe, is that there are a lot of growth names, and I would even look at Ulta Beauty, ULTA. Another stock, Buffalo Wild Wings. There are just a lot of stocks showing growth names in particular showing suspicious action out there. Many look tired, and I think the risk for more downside is definitely there.
And does IBD take that into consideration in their formula? If they see a lot of these leaders that are just getting crushed, does that factor into their analysis?
Well, it factors into stocks being removed from the IBD 50, for example. So if a stock starts falling precipitously in heavy volume, and you see the accumulation valuation distribution rating, for example, go from B to C to D or even worse, right. That will cause a stock to be excluded from the IBD 50. But if a stock breaks below its 50-day moving average in heavy volume, that in and of itself is not going to be reason to have a stock removed from a growth screen like the IBD 50. But repeated signs of institutional selling, repeated signs of distribution in a stock that causes a rating like the AD rating to materially change, that will that will hurt a stock for sure.
I'm talking about the overall broad market and their calls about market under pressure and in the correction. Do they evaluate the overall lack of leadership and use that as a factor in their formula? I'm talking about their broad call. No, absolutely. So weak action in leading stocks factors into it. At this point, at the top of the show, I mentioned the fact that we've had 3 higher volume declines, 3 distribution days in the NASDAQ Composite in the past 5 trading sessions. So that factors into it. And then when you start to see, some of these names I mentioned, like a, CTRX or an Alta or a Buffalo Wild Wings, or some of these leaders that are looking vulnerable, that factors into the decision as well. But I would say that the number of higher volume declines probably trumps that, but when leaders are acting weak, that also definitely factors into it. Right, because it seems like there's more bad-looking charts out there than good. Yeah, I would tend to agree. Pickings are kind of slim, and I think I probably don't need to tell you this, but as a growth investor, sometimes there's nothing wrong with scaling back. Right. The times when I forced the issue in the past, feeling like I needed to be in the market, that's when you tend to make mistakes, and you got to look at the charts. If you're seeing more negative charts than positive charts, clearly the message is to stay conservative and wait for your spot. Right. All right, Ken. Yeah. Good stuff. Thanks a lot. All right. Thanks, Joe. Always appreciate it. All right. Bye. All right, Joe from Boston, student of the market, and he raises good points. I mean, when you go through a screen of 100 growth stocks, some that have the potential to be leaders, and you're seeing wishy-washy action, or you're seeing breakouts that aren't following through, and you're seeing other leaders that are breaking below support levels. You really you got to step back and look at the whole picture here. And I tend to agree with him. On a strong day for the market, I'm going through screens, and it's just like there's just not much out there. Not really interested in buying low volume breakouts. I have volume screens, and I look for growth names that are under accumulation. It's just not happening right now. That's why this volatile whipsaw back and forth action is just a tricky market to play right now, unless you're trading and kind of moving in and out of stocks in 1 or 2 days time. But bottom line is there are probably more bad charts out there than good ones right now. Not to say there's some stuff is working, there's no doubt about it, but by and large it's still a pretty tricky environment. All right, taking a look at some economic data today. Earlier today, consumer price index, overall prices were flat, core rate up 0.2%. No big surprises in the producer price index last Friday. So inflation not a big issue for the Fed right now. Tomorrow we've got housing starts and building permits for June. We've got the Fed beige book as well on Wednesday. Thursday, weekly jobless claims, existing home sales, and the Philadelphia Fed for July. Take another look at Edwards Life Sciences here. A lot of healthcare names still working. Edwards Life Sciences, they make products to treat advanced cardiovascular disorders, so kind of a heart company here. But a nice flat base taking shape here. Stock is up 2.2% today to $103.30. Let's take a look at the weekly chart for Edwards Life Sciences. And what you see here is good, tight trading. You see a big move for the stock, big, strong, heavy volume breakout. This is exactly how you want to see a stock act after a breakout. It's easy to hold. When you're in this thing and it broke out over $85 a share, $87 a share,
if the less volatile price action you see, the better. And you've had very little volatility in Edwards Life Sciences. This is a bit of an anomaly in the market because, a lot of stocks have been moving back and forth pretty violently. But Edwards Life Sciences acting very well in this market, holding gains nicely. Possible that we could see more strength in this one down the line. I would like to, in a technical structure like this, I typically like to see the sideways action like this happen for at least 5 weeks. Gives it time to adequately digest its gains. Edwards Life Sciences right now only about 3.5 weeks into a consolidation, but one that is still acting well here. Let's check in on Spirit Airlines, another growth name that's acting pretty well. Some sellers in the stock today, but this is another example of a potential cup with handle pattern taking shape. You could have the early stages of a handle area here. Stock has rallied nicely off its lows, and you could get a little low volume shakeout here. Not much volume in Spirit Airlines today. It's down 1.6% today to 22.30. Wouldn't want to see this one fall much below 22, 21.50, but let's see if a handle area forms here, and you could ultimately see a breakout for save over $23 a share. Not ready yet though, so this is another one to keep an eye on. Earnings due later this month on or around July 26. This is just a highly profitable airline that's showing great sales growth, earnings growth in recent quarters, and another quarter of strong growth is expected at the end of the month. Earnings expected to be up 27% to 47 cents a share. Sales up 24% to 343 million. So in the airline group, Spirit Airlines looks pretty good. Let's check in on another favorite here, the Fresh Market. Stock hit an intraday high today of 57.08. It is now trading around 55.87, up 26 cents. Watching this one for a breakout too. I'm not staying married to this uptrend. I know the overall market environment is a little wishy-washy here. Not clear to me that new money is ready to come in from the sidelines yet, but if it does, I think this one has the potential to be a leader. Again, up about 0.5% right now to 55.87. Let's take a look at weekly chart for Fresh Market, and we'll see a swing point here of 57.86. So that is the kind of the line in the sand. Good growth prospects at the Fresh Market. Probably should grow earnings by at least 20% over the next couple of years. Aggressive store opening plans. They're mostly in the Southeast, Mid-Atlantic, some Midwestern states. Pretty light presence in New England, and also very, very light in California. I think I mentioned yesterday they have plans to open 3 stores in California, but this is still an untapped market for the Fresh Market. Taking a look at some leaders under pressure here. Mellanox. This is an Israeli chip designer. Again, this is an example of a stock that is, you can see down for several days in a row, giving up its 50-day moving average today, down 5.7%. A lot of institutional selling in this stock lately, and as a growth investor, you really have to start to recognize signs of weakness when they arise in a growth stock. Mellanox clearly weak here, down for 3, 6, 8 days in a row, it looks like, trading around 62.10 underneath its 50-day moving average for the first time in a long time. Another healthcare name that I thought had potential. Looks like it's just going to base for a while here. Cerner, healthcare information technology services, gave up its 50-day moving average recently. Doesn't look like it's ready to reclaim this line. Probably going to base for a little while. Another strong performer that looks vulnerable here. Former holding in my Ultimate Growth Stocks model portfolio, not anymore. Coinstar also looking vulnerable here. This one looked like it had potential in June, breaking out of a nice base here. Breakout rolls over starting in July. Gives up its 50-day moving average yesterday, hits an intraday high today of 64.10, now trading at its intraday intraday low around 62.60. So Coinstar also looking vulnerable here. Tough environment out there for growth stocks, but hey, let's stay optimistic. This market is deviant, and sometimes it will do what is least expected. We'll be right back, folks. Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Let's do a quick check on the markets here. About 5 minutes left to go in Tuesday's session. Hanging in there pretty good. It looked like a session that could have been much worse, but we're still up near highs here. The Dow up close to 78 points, 0.6% to 12,804. S&P 500 outperforming, doing the best today, up close to 10 points, 0.7% to 1363, and the Nasdaq up 13 points, lagging just a little bit, up 0.5% to 2910. After the close today, a couple of earnings reports to watch for. Let's take a look at Intel here. Ahead of its earnings report after the close, earnings expected to fall 4% from a year ago to 52 cents a share. Intel, damaged goods right now, even if it does rally here, 50-day moving average around 26, still looks like it could be a pretty serious resistance level. Intel right now, $25.29, up 16 cents ahead of the report. Sales expected to be up 4% to $13.6 billion. Also, Yahoo. Remember, Yahoo was in the news late last night. Marissa Mayer, Google executive, taking over the helm today, I believe, for Yahoo. Yahoo, just really ugly price action in this stock for quite some time. Hiring a new CEO, a debate will go on for several months of whether Marissa Mayer is the right person for this job. Certainly CEOs have had a hard time. 3 CEOs in the past 12 months at Yahoo. Yahoo certainly had its day in the sun back in the 90s, big market leader. Now it's a broken company, broken stock, and I really just don't see. Yahoo has got tremendous challenges ahead of it. How is it going to reinvent itself? At best, this is going to be a market-performing stock where if the S&P 500 is up 10% one year, you're probably going to get that type of price performance from Yahoo. But just big challenges for this company to start generating meaningful top line and bottom line growth, several quarters away, if that. But Yahoo right now down 4 cents to 15.60 ahead of its results after the close. Bottom line growth is going to be there, up 28% to 23 cents a share. Might even be a little bit better than that. Sales growth still an issue here, only expected to be up 2% from a year ago to 1.1 billion. Tomorrow we're going to get earnings from eBay. Let's check in on eBay. This is another damaged stock here. Hit an intraday low of $38.06 a share today. It is now up 44 cents, outperforming a little bit, up 1.1% to 39.03. Still underneath its 50-day moving average. Some sellers in eBay ahead of its earnings report tomorrow. Earnings expected to be up 15% to 55 cents a share. Sales up 22% to $3.4 billion. And Qualcomm as well. Going to be out with earnings. Qualcomm out with earnings. Where's Qualcomm? I think Qualcomm comes out Tuesday as well. Sorry about that. Qualcomm up 8 cents to 54.44 ahead of the results. Qualcomm just been taken a big hit recently from $68 down to 54. The deep value players will be looking for profit opportunities in Qualcomm. Not a stock that I'm interested in owning at this point. Qualcomm will have a lot of overhead resistance to fight through going forward. So Qualcomm, eBay on Wednesday, American Express also on Wednesday, Chipotle, Google, Intuitive Surgical, Microsoft, all on Thursday. So very busy this week in terms of earnings. Coming up next, the Tom O'Brien Show. Thanks very much for listening. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada